This is a podcast by the Straits Times.
Welcome to Money Hacks, a podcast series by the Straits Times and the Business Times, where we offer tips for the newcomer to the financial investment scene. Hi, I'm Ernest Lewis.
And I'm Chris Lim.
And so, Chris, we're going to talk today about some of the banks here introducing higher bonus interest rates to get customers to save more. Is that something I should immediately consider if I have a sum of money I can set aside? Let's say my grandmother left me an inheritance, or I may have sold off a franchise after starting it up for the past few years.
I mean, all of these accounts are worth considering if you're looking for the convenience of having a single account which has attractive interest rates and that you can manage without having to shuffle constantly funds between accounts just to maximize interest.
Okay, and there was this news that was announced on the November the 1st.
Absolutely. You're talking about the OCBC customers being able to earn an effective interest rate of up to 3.2% per annum on the first 70,000 in their savings account. And this is, of course, known as the 360 account, as long as they fulfill some criteria.
Right. Okay. Now, I did some rough checking of the story and the online calculator at OCBC 360. It feels to me as if it benefits a person if he's looking at an existing savings amount of at least $50,000 to $75,000 in the ballpark. If you look at comparison between OCBC 360 and the other banks, am I right to say that?
Pretty much, though. I should highlight that the goalposts have evolved, so to say, somewhat. So when OCBC first launched OCBC 360, 50K was the amount to aim for, and then went up to 60K, and now we're at 70K. So if you really have an account, you should review where you are at in terms of meeting prerequisites. And if you've been thinking about it for a year or two but haven't entered, you should update yourself as to the prerequisites before taking the plunge, so to speak.
Okay, so just let's quickly go through a few numbers. Now, I understand that if I increase my account balance by at least $500 per month, I will earn 0.3% per annum on the first $35,000 and 0.6% per annum on the next $35,000.
That's right, Ernest. And you also get an additional 1% on the difference between the previous and current month's balance.
Okay, so I get even more, I understand, when I credit my monthly wages of at least $2,000 into the bank account?
Pretty much. So the way to go about it is this. There are a few criteria to fulfill in order to maximize your balance. The goal, of course, is to get as many ticks as possible. You don't have to get all of the ticks, but what you should do is see how many ticks you can get. You should get at least half of the criteria to make it worth your while. So can you credit your monthly salary to this account? Tick, that's one. That's important. Can you spend a minimum, with OCBC to qualify for the next hurdle? If that's another tick. Actually, 2 ticks make sense already. The rest is, cherries on the cake, or icing on the cake, so to speak.
And actually, you're right. It doesn't take me long. I did a check. I took a train from Toa Payoh to Somerset. Very short journey. I was able to use the calculators from UOB, OCBC, and DBS, and I could effectively calculate how much interest I was going to earn after 1 year. And I noticed that across all 3 banks, if I wanted to earn $1,000 at least in interest savings over a year, I needed at least 50,000 to about 75,000 balances. If I don't have that, and if I have only, say, 10,000 to play with, it looks like I'm earning only $250 at the end of 1 year. So is that worth my while if I don't have such a big sum?
You need to do your sums, and you need to look at your overall spending and saving behavior, because all the banks have multiple criteria to lock you into their sweet spot. So you have to see if your spending and saving behavior as a whole falls into the sweet spot of DBS, OCBC, or UOB, or the rest. But the good news is, speaking from a consumer point of view, all the competition makes for a winning environment, a winning amount of options for consumers. So since OCBC has launched OCBC 360, DBS has upped their game, UOB has upped their game, etc. So you have many options. Make sure that you tick a few boxes in terms of the prerequisites, and then you're good to go as long as you're on the trajectory to tick the other boxes. That's the key. Are you on the trajectory to tick the other boxes after ticking at least 2 or 3 boxes?
Okay, and on the online calculators, you can actually, it's very easy to click which are the criteria. that you
Absolutely.
need.
There's no
Yeah.
excuse not to do the sums. Plonk in some numbers so that you can get a feel for whether or not this is the direction you could conceivably, reasonably, realistically be moving in.
Now, if you're liking these money hacks so far, do subscribe to Money Hacks on Apple's podcast app or on Google Podcasts or even on Spotify, and like us and give us a rating, okay? Just to clarify, we're talking about the OCBC 360 account here, the UOB One account, and also the DBS Multiplier account.
Absolutely. I mean, the UOB One account gets you an effective interest rate of up to 2.44% per annum in bonus interest on the first 75,000. If, again, you see all the criteria, if they spend $500 on their credit card and credit their monthly salary of at least 2,000, or have 3 Giro debit transactions. So again, just put this on a piece of paper and see how many ticks you can get. I mean, spending $500 on your credit card is not difficult, not because you're a spendthrift, but because you can use your credit card to pay for your monthly overheads, your monthly expenses, everything down from your utilities to your petrol.
And can I ask you, Chris, why do you think the banks are doing this? Is it a sign of our times, these higher bonus interest rates?
I think there is a hustle to grab a demographic. I mean, DBS traditionally has owned the average savings account, the everyman's savings account, and OCBC's 360 a few years ago was a clear move into DBS's I don't know, cream domain, share of the market.
Yeah.
And then UOB sees that and say, hey, I want some of that too. And the good news for the consumer is that competition means more favorable options. And the key is options for you to enter. But, do your sums, as you've said, Ernest, use the online calculator, plug in the numbers to see how many boxes you tick. And more importantly, are you moving in the direction to tick more boxes as your career progresses, as your savings behavior matures? DBS has the multiplier account that can earn customers up to 3.5% per annum in interest on the first $50,000. So again, how much do you have, and do you make it to that criteria to earn that 3.5%, or do you have more than that? And is that extra above $50,000 being leveraged? Are you getting an additional interest rate on top of that? Do the sums. There's no substitute for due diligence.
Well, thanks, Chris.
Well, that's a wrap for Money Hacks. We hope you like these latest tips. Do subscribe to Money Hacks on Apple's podcast app or on Google Podcasts or even on Spotify. And remember, like us or give us a rating. Thank you.
That was an SPH podcast. Find us on iTunes, Google Podcasts, and streaming on Google Home. Do send your feedback to podcast@sph.com.sg. You can also check out more podcasts on various topics at straitstimes.com and bt.sg. Any financial or investment information in this podcast is for use in Singapore only and is intended to be for your general information. Any particular investment or decision should only be made after consulting with a fully qualified financial advisor.